I mean, Dan, you make the point in your client note today that there have been concerns among investors about Google's ability to monetize its AI. Presumably this would go a long way to allaying those fears.
Yeah, it's been black eye after black eye for Google, from PR issues to other things with Gemini. This is validation. I mean, if you have Cupertino and Cook picking Google, huge validation for their AI strategy. And there obviously there'll also be a significant license fee associated with this. It's a win-win for both Apple and Google.
I mean, Apple's been working on its own AI technology called Ajax. What do we know about that?
Well, look, I think we're going to hear more about this at WWDC in June. I think Apple's going to have their own LLMs, their own technology, but they're partnering with Google as well. I think that's the right strategy. It's multifaceted in terms of this AI revolution. Apple needs to make sure they're not on the outside looking in.
I mean, earlier this year, Google actually partnered with Samsung to introduce some AI capability on the S24 Galaxy family. Would you have competition concerns if they got into bed with Apple as well?
Yeah, I would, because this is probably going to be an Apple branded product. And I think for Google, from a partnership perspective, they'd be much more heavy to focus on the Apple AI opportunity. And I do, but important, I think this will be an Apple branded AI technology with Google behind it.
All right, Dan, we've got to leave it there. Great to catch up with you this afternoon. Thanks very much. Now, the UK's luxury sector is worth £81 billion a year to the UK economy, the equivalent to 3.7% of GDP. But legislative reform is needed to protect it. Well, that's according to Walpole, which is the official body for the UK luxury industry. It's calling for reform to intellectual property laws to protect jobs and growth and ensure future growth. Its new report today, Luxury in the Making, suggests the sector's contribution to the economy has grown by 69% in 5 years, supporting more than 450,000 jobs. Well, joining me now to talk about this is Helen Brocklebank. She is the Chief Executive of Walpole. Helen, good to see you this afternoon.
Oh, thank you for having me.
The luxury goods sector in the UK is up 45% in 5 years. That doesn't feel like an industry in need of greater government protection.
Well, I think you don't miss your water till your well runs dry, does it? I mean, this is, 81 billion, 69% growth in 5 years. That's a great good news story for the UK economy, and particularly when it supports 450,000 jobs up and down the country. But because it's such a great sector, because we know that it can grow as well. I mean, our forecast for growth is to 125 billion in the next 5 years. But if you don't wrap your arms around it and kind of make sure that you're really supporting a great national asset, you could lose it. So there are things like, you have absolutely, so geographical indication status. Do you want me to tell you a little bit about something like that?
Yeah.
So I'm very obsessed by this because...
this is what protects Parma ham and cheddar cheese.
It protects Parma ham, it protects Scotch whiskies, English sparkling, there is an English sparkling wine, Melton Mowbray pies. So at the moment in the UK, it's a protection for production processes in particular regional areas, that really supports their IP and also supports the skills that make those products. But it's only in food and drink. Now, what about Savile Row suits? The bespoke skills that are unique to this country, or Staffordshire potteries, like Wedgwood, or Church's Shoes and Edward Green in Northamptonshire. So there are these incredible regional clusters of extraordinary skill, things that are important to our cultural heritage. Let's support them. They've got this in the EU, and really we should be competing with our luxury friends in France and Italy, and not really letting the side down a bit by not giving them the support. One
thing I was very struck by is that you want greater priority put on the teaching of foreign languages in schools and colleges.
Yes, it's really important. The customer is an international customer. So, the exports of this sector are 56 billion, so it's an increase of 45% in the last 5 years. So it is a sector that produces goods in this country for overseas markets and then also brings in international visitors. And if you're in the big retail centres, London, the shop window of luxury for the world, you really want to be able to talk to your customer. Now, in Germany, about 91% of people under 30 have a good second language. That's about 30% in this country. So There is good stuff happening. There's been lots of some investment in teaching Mandarin, for example, but we need it to go further. So obviously European languages, but Mandarin, Arabic, world languages really help us compete.
You also make the point that you want to see reforms made to the apprenticeship levy. I mean, the Prime Minister's actually been speaking about widening apprenticeships today.
Yes, and that was great because actually I thought, has he just read our report? There's some things, there are some really good things there. And I think apprenticeships are what these great businesses are built on. I think there's further that can, that we can all do further work there. But if you're thinking about those incredible skills that do exist, if you're making a pair of shoes by hand, then really you need to be putting the investment into apprenticeships. So however that levy can work, not just in a long-term thing, but maybe even being broken down into supporting shorter courses, things like that. We put the investment into young people, we get the returns in the economy.
Yeah, now you've been at the forefront of the campaign to restore tax-free shopping for overseas visitors. Didn't get any change out of the Chancellor in the budget. Have you given up hope yet?
No, it's so frustrating. I mean, it was such a missed opportunity. It's an important part of our competitiveness with Europe. We're seeing international tourists come here, having a look in the shop, going to Smythson on Bond Street, and thinking, well, can I go, if I go and, to one of the other Smythsons around the world, or Church's Shoes in Paris, not buying it here in Britain where it's made, and then pricing it up and going, well, I'm going to wait till I go to Paris next month and buy it. And it's about that supply chain through into regional manufacturing that we're really het up about. So we think it's an opportunity and we won't stop until it's reinstated. Well,
there's another fiscal event coming up later in the year, we're told, so who knows?
We're going to keep going.
All right.
I'm a nuisance in number 11. We'll continue to be so. Thank you so much.
Good to see you, Helen. Thank you.
Thank you.
Some other business news stories for you now. And Currys said today that since the 6th of January, sales have been stronger than expected. The UK's biggest electrical goods retailer said that as a result, profits for the year would be at least £115 million. It had previously indicated they would come in at between £105 to £115 million. Well, the news comes days after the Chinese e-commerce giant JD.com and the US activist investor Elliott said they would not be pursuing takeover bids for Currys. Shares of Currys have risen by more than 4% on that news. The UK's biggest supplier of paving slabs, curbstones and protective street furniture said today it blamed weakness in the house building and construction sectors for a drop in profits. Marshalls, which also owns the roofing tile supplier Marley, reported a pre-tax profit of £22.2 million for 2023. That was down 40% on the previous 12 months. Well, Marshalls admitted sales in the first 2 months of the year were lower than in 2023 and warned that activity levels would remain subdued in the first half of the year. The shares have been down by as much as 11% this year. The insurance giant Aviva has raised £937 million after completing the sale of its 25.9% stake in Singapore Life Holdings. The sale to Japan's Sumitomo Life was first announced in September last year and also included the sale of 2 debt instruments. Well, Aviva had held the stake since selling its majority holding in Aviva Singapore to a consortium led by Singlife in 2020. The sale means that Aviva has brought in some £8 billion from disposals during the last 3 years. Still to come here on Business Live, we'll have a look at how the markets have done this Monday afternoon. Stay with us.
I'm Neville Lazarus and I'm Sky's reporter based in Delhi.
I'm David Blevins, and I'm Sky's senior Ireland correspondent. Politically, the two sides are as far apart as ever, and it's over that question of who has sovereignty in Northern Ireland, the very issue that's been the source of tension here for generations. I've spent 25 years reporting the journey from conflict to peace.
The political parties of Northern Ireland have reached agreement.
We already know what the government gets out of this deal. What exactly does the DUP get out of it? Well, £1.5 billion. If there's anyone who might know how to fix Northern Ireland's devolved government, it's the American architect.
Changes in circumstance require changes in approach.
If we both contract COVID-19 and end up in hospital, religion's nothing.
If there's a hard border, I think it'll cripple the country.
You want to talk business? Meet me in the On-Board Lounge. Fly Emirates, fly better.
Well, the oil price has today hit its highest level since the 6th of November last year, following successful Ukrainian attacks on Russian refining capacity over the weekend. A barrel of Brent crude currently changing hands at $86.31 a barrel. That is up more than 1% on the session. On the equity markets, here's how stocks in Europe have finished. Pretty much unchanged across the piece there. There were some good gains this morning, but they've largely evaporated as the day has gone on. Features this afternoon include Logitech, the Swiss maker of computer mice, or mouses if you like, and keyboards. That's off 7.5% in Zurich after the unexpected departure of its chief financial officer. Well, here in London, here's how the FTSE's finished up, more or less unchanged, as you can see there. Again, the FTSE was ahead this morning, but those gains have evaporated as the day has gone on. In percentage terms, the leading blue-chip gainer today has been British American Tobacco. That's finished up 2.5%. That's on comments from the chief executive to the FT over the weekend about possible share buybacks. Another leading gainer to mention, in fact, that is the top blue-chip gainer, the Lloyds insurer Beazley. You'll recall we had the CEO on recently talking about the company's latest results. They've attracted a bit of positive broker comment today. Also up is Reckitt Benckiser. That's rallied slightly after Friday's big sell-off. Among the fallers, the insurer Phoenix Group is off some 4.75%. That's following weekend press comment. Meanwhile, Haleon is down 4.75%. That's on news that the US drugs giant Pfizer plans to reduce its stake from 32% to 24%. Over on Wall Street, all of the main stock indices have opened to the upside. Talking points today, well, I mean, the big one was Apple and Alphabet, which I mentioned earlier in the programme, but Boeing is currently off 1.25%. That is on reports that a federal grand jury in Seattle has issued a subpoena to the company over the recent blowout of a door plug on a Boeing aircraft operated by Alaska Airlines. Over on the foreign exchange markets, well, it's all pretty quiet. We've got some big central bank decisions this week from the Fed, the Bank of Japan, the European Central Bank and the Bank of England. As you can see there, sterling little changed against the dollar or the euro, likewise a single currency against the greenback. Well, joining me this afternoon is Freddy Colquhoun. He's Investment Director at JM Fin. Freddy, good to see you today. I mentioned Marshalls in the programme a little earlier. I mean, big mainstay, this of the building materials sector, but not very encouraging statement.
Yeah, tricky day for Marshalls. I mean, it's come off the back, I would say, of a difficult 2023 for them with a weak housing market and construction sector, as you said earlier. I mean, profits are down across two of their main divisions by over 50% within their landscaping division and building products. Roofing was quite positive, actually, so that was a bright spot. But, you know, they've got into battle mode, essentially, to try and protect the balance sheet. They've cut the dividend, and they've said that, actually, 2024 is going to see quite a slow recovery. Yeah,
what I thought was quite worrying was that their sales in the first couple of months of this year, they say, are down on last year. Latest GDP data suggests construction did quite well in January.
Yeah, it's surprising that. I mean, obviously it's a bit of a follow-through. I think the data gets better first, and then orders come through a little bit later on, and that's why they're saying the second half of this year should see a bit more of a steady recovery. But you know, the shares have rallied since October last year by about 50%, so they've been a pretty good performer, but have just pulled back on this news.
Yeah, now back in the FTSE 100, Reckitt got absolutely smashed on Friday afternoon. It's staged a bit of a dead cat bounce today, but nothing really to write home about.
Yeah, exactly. I mean, they fell by 7 billion of market cap, came off the price on Friday, one of the largest falls in their history, on the back of that state ruling against them, costing £60 million. You know, whenever there's litigation, there's concern, investors have concern, but they came out fighting today. I think that's why the stock up's a little bit today. Essentially, they're saying that it's not their fault. They're going to appeal that particular case. And they've made no provision either, which I think is quite a strong call.
Yeah, I saw one or two pieces in the weekend press suggesting they may be a takeover target on the back of this. Is that credible in your view?
Possibly. I mean, I don't think any potential suitor or acquirer will like this news. I think they'll probably want to see a little bit more water going under the bridge to see sort of how many more potential cases come out. I think there's over 400 potential cases that are being lined up, and probably more. You know, figures out there at the moment, seeing some estimates of potentially a 4 billion liability. It's quite early to say that figure with much certainty, but I think we just need to be a bit careful on that.
Yeah, I mean, they do have some fabulous brands. I mean, if one of the US big guns wanted to take them out, I mean, there's a great portfolio.
Really good portfolio of brands. You know, the company did extremely well through the COVID period. Dettol is one of their most familiar ones, of course. But I think, you know, essentially the market is pretty much valuing their nutrition business, which is where the problems have come from their Mead Johnson acquisition in 2017, which is ultimately turning out to be a pretty bad acquisition, with hindsight. So nutrition perhaps valued quite a low value today, but the rest of the portfolio does look quite attractive.
Yeah. Now, elsewhere, another one that jumped out today was Bytes Technology, one of the sort of smaller businesses around, and yet the real mess. Shares are off 12%, I think, at one point today.
Yeah, so they announced a trading update today, which is quite positive. You know, Bytes Technology is essentially a IT software company. It's a wholesaler really to Microsoft. Microsoft is one of their big customers, 50% of profits, and they're really helping Microsoft roll out their new Copilot facility across many businesses. However, I think the shares are down today because ultimately there's this investigation over the ex-CEO, Neil Murphy. Fairly extraordinary, actually. Essentially, he's been found to have made 134 illegal transactions in the company shares over a 3-year period, and that's what's not the shares.
Yeah, it looks a mess. Freddy, got to leave it there. Good to see us ever this afternoon. Thank you. That's it from me. I'm back again tomorrow morning at 11:30. Hope very much to see you then. In the meantime, do stay tuned. Up next, it's Mark Austin with the News Hour. Thanks for joining me today. Cheerio.